The RBA didn't cut interest rates. What are they smoking? Wall Street up nearly 500 points despite the coronavirus. What are they smoking? And CSL, this is a smoking hot company. I'm Peter Switzer.
I'm Paul Rickard.
And we're
mad about money.
Paul, Reserve Bank didn't cut. And they also think the economy is grow this year at 2.75%. It made me ask the question, what are they smoking?
I'm not sure they're smoking, Peter. I mean, they were right not to cut, right?
Yeah, I agree. I do agree.
The case for a cut has never been there. Setting interest rates lower isn't going to help anybody. But they were pretty optimistic on their growth assumptions, Peter. And some of the economists, the learned economists out there, still saying they're going to cut in a couple of months'
Shane
time.
Oliver, we think Shane's a bright guy. He thinks in the next few months we'll see the cash rate at 0.25%.
I hope he's wrong.
Well, maybe we should be asking, what is Shane smoking?
What is Shane smoking? What is the guy at the NAB smoking as well? There's a whole lot of them. But
Alan Oster, Bill Evans, they're all smoking.
It's like the economists don't know anything else apart from a rate cut.
Oh, don't be mean.
Well, that's true. Anyhow, but I think the smoking bit is more the Reserve Bank still seems pretty optimistic about growth, and obviously I think people are a little more worried than the Reserve Bank about the impact of the fires and the drought and the coronavirus.
Yeah, and I actually wrote a piece for Switzer Daily where I actually listed about 8 things about the economy, which is a lot better than what people expected. I was surprised when I went looking. The stuff is actually quite good. And by the way, I think the Reserve Bank thinks that the government's going to spend a lot, and that spending will help the economy. So it's going to be very interesting to see how the Treasurer, Josh Frydenberg, reacts to this no cut, because it means the pressure's on him now to spend in the budget. I
mean, you get very mixed anecdotal data. I mean, we had another retailer yesterday go into receivership or administration. We know retailing's tough. There's obviously huge disruption. This is about the internet. But people just buying online rather than in stores. So there's a whole lot of stuff here you've got to put to one side. But you look around the streets of Sydney and Melbourne, things are busy, right?
Yeah.
Transport's busy, right? So employment is
We're
still
buying
strong.
Experiences and services, Paul.
We are, but we know the drought's having an impact. So it's really hard to get a good read on the economy. But I'm probably like you, Peter. I think it's just a little bit of softness, but government spending can turn it around.
Yeah, I don't want any more cuts. I want the government spending.
No cuts.
All right, let's go to Wall Street. What are they smoking? Everyone's worried about the coronavirus. I saw a heading today, China could be going into a technical recession. And then I looked at the Dow, up 500 points at the time. What are they smoking?
I think you're smoking by thinking China's going to go into a technical recession.
They're wrong, but that's the headline.
They don't have recessions in China, right? Growth might go down from 6.1 to 5.9, but they don't actually have recessions.
That's correct.
So I think that's a smoking headline. But look, it's certainly having an impact. And when you've got total travel bans, which you do, coming out of China, this is going to have a huge impact. We've seen it in commodities. We've seen it to some extent in the bond market, although it rebounded a bit last night. Wall Street seems to have pretty well ignored the coronavirus.
Because America is on the comeback trail, as Donald Trump's going to say tonight.
Donald says the Democrats can't count any votes. Donald
couldn't sell chooks in a pub at a chook raffle.
Yeah, Donald gets to make his speech and does the State of the Union tonight. He gets cleaned off by the... exonerated tomorrow by the Senate, and his popularity ratings are back to sort of post-election levels. So, look, I don't know. It's the US. It just powers along, but I think we've still got this. We're not out of the woods on this coronavirus.
No, definitely not.
And certainly the impact of China on the 2 big industries that really count for Australia: tourism and education. Look, there's something like 100,000 students that haven't come back to our universities. Talk about one of the major universities saying, let's delay the semester. This has a huge impact. So I think this is more impact on Australia and a lot of the industries here than we realise.
If you put education and tourism together, they are nearly as big as iron ore when it comes to export. Number one's coal, that hateful product called coal, then iron ore, and then tourism education, number 3. Let's go to the last question. CSL, you reckon this is going to be really important to reporting season?
Well, I think there are 4 stocks that are absolutely going to make or break reporting season, and they are in order: CSL, Commonwealth Bank, Woolworths, and Afterpay.
Now, you couldn't get 4 Cs, Paul.
I couldn't get 4 Cs. I got 2 or 3. Anyhow, let's talk about CSL. It's probably the most important. It's next Wednesday. That's the 12th of February. This is a stock that is now number 2 by market cap, probably about to become number 1. The share price performance is phenomenal. The trading just in the last few days is phenomenal. On Monday, when the market was off 90 points, CSL was up a little bit. And that tells you the fund managers are still short. When I say short, they are way underweight CSL because they've always said this stock is too expensive. Yeah. There are a lot of other global healthcare companies you can purchase. But there's a shortage in Australia of companies with top and bottom line growth. CSL has a habit of over-delivering a little bit in its profit results. It's never under-reported. Expectations aren't that high, but if CSL, again, shoots the lights out in a reporting season, it's going to surge. If it underwhelms, I think it's going to change the tone. So I think the CSL result next Wednesday is really, really
Are they creating a product for the coronavirus?
Look, I don't know whether there's anything that, Peter, but that's going to take years.
But that is their area, isn't it?
It is their area, and I don't think the market's ascribing CSL to that. But again, in January, healthcare was the best performing sector in the market, up 12%. You got to look at what's going on in healthcare. You got to look and think. A lot of the fund managers, they never held CSL. They now have to. Even the defensive portfolios, Peter. Yeah. We know in our Switzer Dividend Growth Fund, you have to hold some CSL because it's just such a big factor in the market.
For the growth part,
and that's what's starting to happen. The fundies, they're long value stocks which are out of favour. They're short the growth stocks. I think this is. I won't say it's a bubble, Peter, but this is still going. And again, a lot of retail investors are underweight. So any dip in CSL is being used as an opportunity to buy. Now, that sentiment can turn around a little bit if CSL underwhelms. That's why I think it's for profit report next Wednesday. We'll talk about it, Mad About Monday next week on the same day.
Mad About Monday.
Well, Mad About Money next Wednesday. It'll be out that morning, as will the Commonwealth Bank. I think that is really important.
Okay, and that's from a guy who is not smoking anything.
I'm not smoking anything.
I'm Peter Switzer.
I'm Paul Rickard.
And we're Mad About Money.